Good morning and welcome to the Killick & Co podcast for the 27th of January. Towards the end of last week, we saw selling pressure across stock markets in America and across Europe, here as well in the UK. We'll take a look at some of those charts. Reasons cited, well, we saw quite a bit of interest in the emerging markets, in particular the Argentinian currency, which we'll show a chart of shortly, and also some troubles in Turkey as well with the Turkish Lira. These issues are creating volatility across the globe and are giving obviously an opportunity in the equity market to see a pullback after many months of fairly sort of committed rises to the higher ground. So a shakeout has happened towards the end of last week and continuing somewhat into London this morning, where we're seeing a further 1 to 1.5% off of market prices. There have been some newsworthy issues. We've got BG Group this morning issuing a guidance warning for 2014, 2015. The market hasn't taken that well. Again, we'll take a look at the chart. And also we had AT&T commenting upon Vodafone, ruling themselves out from potentially bidding from that. So some of the bid premium in Vodafone shares are coming out this morning. So let's just take a look at what we can expect for this week. Well, first of all, a fairly packed diary, as my opening slide suggests. Really just to pick out a couple of bits and pieces here. In terms of the US, the focus will be on the FOMC rate decision. That comes out on Wednesday, and really the indication here is that that tapering $10 billion per month, which began last month, will continue this month. That will take it down from $75 billion to $65 billion. And if that were to be the case, then fairly predictable sort of continuation of that over the coming months. It is the last meeting for the Chairman Ben Bernanke, so formally handing over to Janet Yellen at this stage. In terms of corporate results, a vast majority of US corporates have reported their fourth quarter numbers. Broadly, it's around about 65% have beat expectations, so the numbers are fairly positive. We do have numbers today from Apple that report after the market close, so intense interest in this number for the quarter four, and we'll also be hearing from Caterpillar as well, more on the industrial side, and that will be interesting, particularly given the perceived slowdown that is taking place in the emerging markets at the moment, and the ramifications also for China, where the Chinese stock market has proved to be one of the poorer performers of 2013, and that trend continuing somewhat in 2014. So let's just take a look at some of these charts which were driving markets last week, and we start off with the Argentina currency. And as we can see here, that it has been a weakening situation through the course of 2013, but that weakening accelerating and now running at about 8 pesos to the dollar. So a committed devaluation there from Argentina. And then just pulling up the Turkish Lira, if we take a look at this chart, we can see again, so both situations 20 to 30% depreciations being seen during the course of 2014. Now, a point to note on Turkey is that there has been a flash announcement this morning that the Central Bank of Turkey will meet tomorrow, and anticipation of something from there has meant that post the production of this particular chart, we've seen quite a strong reversal in the weakness of the Turkish Lira, and so it's sort of pared around half of those losses that were achieved over the last couple of days. So focus will turn attention tomorrow on what they plan to do to try and arrest some of the falls in the currency that have taken place over the last few days. So bear that in mind for tomorrow. Some volatility definitely creeping into these currency markets. And volatility likewise in the stock market, where the FTSE 100 is now in negative territory for 2014. So it's given up on modest gains of 1 to 2% in the early part of January to now trade down 1 to 2% at just under 6,600. And that is the sort of register of the fall for last week. Now, in terms of some of the stocks, Unilever interestingly were quite impressive last week. During 2013, in September, October time, the company did warn on profits and suggested a slower emerging markets was causing them to be concerned about the fourth quarter. In fact, actually the fourth quarter proved to be quite strong for them, and a net result of that were that some of the more bearish commentators on Unilever sort of upgraded estimates for the business through 2014. So net result of that is that we did see quite a strong spike in Unilever, touching around £25, obviously coming under a little bit of pressure towards the end of last week as a result of general market falls, but nevertheless it seems to have got through the worst of the emerging market problems for now. In terms of other charts, I wanted to bring up the chart of Shell, Royal Dutch Shell. Now, commenting about a week ago on Shell, we spoke about them having a difficult fourth quarter, and a new CEO used the opportunity, we think, to kitchen sink the numbers. So he was quite critical of performance and said that it's not what he expects of Shell, and guidance was cut across the board. But has that laid the groundwork? I've been particularly impressed over the last couple of weeks or so, 10 days since that profit warning, in terms of the resilience of the Shell stock price, which is, as you can see from there, at least sort of rallied and on the back of that warning. Expectation there that this may lay the groundwork for a more aggressive restructuring within the group, and whether that could actually throw up a little bit more value within the business. So really just keeping an eye on Shell at the moment is one that is showing some good relative strength despite a profit warning. That same sort of issue that impacted on Shell was also true of BG Group, and this share price chart tells the story of the Q4 2013 guidance downgrade, which took place this morning. Shares have reacted very negatively, down around 14%, and I think most dishearteningly it is the fact that they are downgrading guidance also for 2015. This won't be particularly well received, particularly as we have a sort of relatively new CEO within BG Group. He's been there now for around 18 months and really laid the groundwork last year for forward guidance, and therefore disappointing that they've hit so many troubles in the very near term. So a 14% sort of fall on the stock price today at BG. Just a final couple of charts. We've got Vodafone. It is all eyes on Vodafone as the EGM takes place, where this company will be split into effectively three components for a Vodafone shareholder. They'll retain a position in Vodafone shares, they'll have some cash, and there'll also be some stock in the US company Verizon. So corporate action notes on their way to holders of this stock, and we'll be giving guidance to those investors as to what we think we should be doing. In particular for smaller holdings where there will be three components, we'll take a look at the ramifications for holdings of Vodafone in light of that sort of a new sort of structure for the business. So keep an eye out as holders for that particular chart.